I'm joined today by Ian Rickwood of Henley Investment Management. Ian, thanks very much for joining us. For those who don't know, just tell us a little bit about the company and also particularly the investment strategy there.
Henley are an investment management firm that have been around since 2006. So we started just before the GFC, which was interesting timing, and have really progressed on a journey since then that's been a very entrepreneurial journey. Today, we have a defined core strategy for the UK, where we have a large social housing business. We have a value-add and opportunistic business in Europe and a value-add and opportunistic business in the US. And in Europe, we're focused on 2 or 3 specific strategies at the moment with a very development-led focus. And then we've done many things over the years in the US. We got to some scale in multifamily. We're fortunate enough to sell out of our assets in 2021, which obviously worked to be proved to be good timing. And today we're very focused on car wash in the US.
It's interesting, Ian, we've been focusing quite a lot on alternative assets. They're continuing to grow in terms of investor interest. I guess what's the appeal of car washes? What are some of the key drivers there? And how big is the market at present?
We've been in the car wash business now for about 3 or 4 years. And why we got into the business in the first place was because the macros were so strong. So we like it because it's a just under $20 billion market. It's growing at 6% CAGR. There are about 60,000 car washes in the US, and yet the single biggest brand has only about 440. So it's incredibly fragmented. And then on top of that, the economics are great. Unit economics are very attractive. You're talking about a 50% EBITDA margin business, recurring revenue with the membership programs at something like 80%. So it's very attractive macros and very attractive economics.
You mentioned there the fragmentation in the market. So I guess what are some of the challenges to entry?
If you just sort of take a step back for a second, the way that the market is split out in the US is you'll have the garage forecourt, gas station, rollover car washes that we're all familiar with, which do a pretty lame job, to be honest, in their ancillary service. You have a whole bunch of what they call in-bays in the US, which are self-serve, where people go and use the hose and clean it themselves. And as you can imagine, in a world where people are expecting things to be done for them, that's also a declining space. And then the bit that we're really interested in and where the growth is in the express tunnels, where you can have multiple cars being cleaned at a time, and it's an incredibly quick and convenient service. And that piece of the market represents about a quarter of the tunnel number in the US, but about 50% of the value. So that's where the growth is, and that's where the story really is. Even within that, it's still fragmented. So it's fragmented across the lot, but even within that piece, it's fragmented. I think rather than seeing that as a challenge, we see that as an opportunity, because it's a market that's been around for a long time. It's been a market that's been underinvested in. And I think the play here over the next 10, 15 years is going to be about a mass consolidation. So as I say, the largest brand at the moment is only 440 units. There's 60,000 overall. Within that tunnel piece, there's 15,000. So even 440 of 15,000 is still a very small market share. And that's 15,000 is likely to grow, according to Boston Consulting, to about 35,000 in the next 10, 15 years. So it's where the growth is, and it's where we think the consolidation is going to come.
And is this really a straightforward consolidation play in, or is there some kind of strategy in terms of slight market disruption or different service levels? What's the plan?
The way that people generally have approached it up until recently, and we have a different view, and I'll explain that in a second, is through M&A. So a lot of people have thought, I know, we'll go and buy up because there's all these mum and pop operators, or maybe brands with 3 or 4 or 5 stores. So we'll go and play a consolidation that way. And a lot of people have done that over the last few years, and at times it's been successful. But what also people have found, and what we found initially with our first investment, is actually it's not as smooth as it might be. And that's because the tech is really very last century. So the software that people are using hasn't been very good. And indeed, the software isn't even controlled by the operator. It's controlled by a third-party company. So that when I buy your business, for example, and you own 3 car washes and you've got several thousand members, I suddenly find that for me to move you onto my POS system is very difficult to do, if not impossible. And if I do that, there's a risk I lose all of your members. And if 80% of my revenue comes from membership, and I lose those members and I have to go and have them re-sign up to get them back onto my POS, you can imagine the risk of losing revenue through that process. So I think the integration has been far harder than people probably realize. There's other things as well. The capex of improving a store when you buy it can often cost more than people realize and doesn't always yield the level of revenue growth that you might desire. So that whole M&A piece has started to dry up a little bit in the last 12, 18 months in the car wash business after about 3 years of explosive growth. Our strategy with our brand that we're growing out now is different to that. We're all about greenfield development. So we'd rather take a piece of dirt, frankly, and we'd rather build the most cutting edge, best in class asset that you can do. And that's the approach that we're taking. So greenfield development over M&A is probably the big pivot that's gone on. It's where we're focused, and I think it's where others are starting to look now as well.
Here in Europe, there's less of a focus on that membership side of things. So it'd be interesting to get from you as well. Is that something that you think could also potentially be exported, I guess, towards Europe? What's the growth trajectory for you? Any plans to export to new territories? And do you think there is opportunity for growth here in places like the UK and Europe for that sort of strategy?
But if you sort of turn it around for a second and you look at consumer need, which is always a good place to start, consumer need here that's being met is one of convenience. So if you go into one of these express tunnel car washes, it's going to give you a very good clean, a very good quality clean. But in terms of time, you'll be able to roll up. If you're part of a member, that you'll be recognized straight away. You'll be able to drive straight into the tunnel. The tunnel will do 7 or even 8 cars at a time, depending on the length of the tunnel. And from the moment of driving onto the lot to driving off the lot, you can be out in 3 minutes. That's incredibly quick. If you think of the times when you roll up to a gas station, a BP or a Shell, and you go in, you put petrol, and you've got to go and buy the car wash token, or they give you a piece of paper with a code on it these days, and then you've got to drive around, and maybe there's 4 cars in front of you, and every car takes 8 minutes to go through. Before you know where you are, you've used up the best part of half an hour, 40 minutes. So that convenience factor is huge. The other way that we know that it works in Europe is you go to a sort of very often dodgy looking industrial estate somewhere, and there's a bunch of workers in there, and again you wait in the queue and you come through, and maybe you have to get out of your car and you go into a waiting room that you wouldn't want to put your worst enemy in and sit there and read an old copy of a newspaper whilst they're cleaning your car, or you stay in it and they just do the outside. But again, it can be very, very slow. So that consumer need for convenience, I think, is the same in Europe as it is in the US. But you're right, there's not very many car washes, not many tunnel car washes in Europe at all. So I think the short answer is yes, we expect it to grow there as well and to become a substantial part of the market. The way I liken it is a little bit to when McDonald's first came to the UK. Back in the 1970s, and no one had ever heard of McDonald's. And of course, it was a revolution in ham. All we had at the time was Wimpy, and it was a revolution to that experience. Or Starbucks in the 1990s to the coffee experience. I think this will be the same with car wash as well.
I definitely remember Wimpy's and coffee before Starbucks as well. And also, your description of what a car wash is at the moment is something that I certainly experience. So there's very little software involved there, I can tell you. Really interesting to catch up, Ian, and look forward to seeing how that progresses. Thanks very much for joining us.
All right, thank you.